OPEC Plus increases oil production, what it means for gas prices. In a move that could reshape the global energy landscape, OPEC Plus has decided to significantly increase oil production starting September, adding 547,000 barrels per day to the market. This decision, announced on Sunday, marks a dramatic shift from the group's long-standing strategy of restricting output to stabilize prices. But here's where it gets controversial. While this could lead to lower gas prices for consumers, it also raises questions about the geopolitical motivations behind the move, especially amid escalating tensions between the US and Russia over Ukraine. And this is the part most people miss. The decision comes at a time when the US is intensifying efforts to isolate Russia economically, pushing for negotiations to end its invasion of Ukraine. Could this production hike be a subtle response to US pressure? Or is it purely market-driven? Let's break it down. For years, OPEC Plus, led by Saudi Arabia within the OPEC cartel and Russia as the key non-OPEC member, has deliberately limited oil production to keep prices high. However, earlier this year, the group began reversing course, influenced in part by calls from U.S. President Donald Trump to increase supply. This latest announcement means the group has now completely reversed its previous production cuts, potentially flooding the market with additional oil. For consumers, this could translate to lower fuel costs, a welcome relief in a year marked by economic uncertainty. But the timing is intriguing. With the U.S. ramping up efforts to bring Russia to the negotiating table over its full-scale invasion of Ukraine, could this production increase be a strategic move to ease economic pressure on Moscow? Or is it simply a response to global demand? Saudi Arabia's dominance in OPEC Plus and Russia's pivotal role in the alliance make this decision even more significant. While the group's primary goal may be to stabilize oil markets, the geopolitical undertones are hard to ignore. Is this a win for consumers, a strategic play in global politics, or both? As our journalists continue to dig deeper into this story, one thing is clear. This decision will have far-reaching implications. What do you think? Is OPEC Plus's move a step toward economic relief, or does it signal something more complex? Share your thoughts in the comments below. We'd love to hear your perspective. OPEC Plus increases oil output, what it means for the market. In a surprising twist, OPEC Plus has decided to significantly boost oil production, marking yet another major output hike as the organization aims to reclaim its market share. This bold move comes amidst growing concerns over potential supply disruptions linked to Russia, and it's causing quite a stir in the global energy sector. Let's dive into the details and explore what this means for the future of oil prices and international relations. A group of 8 OPEC Plus nations recently convened for a virtual meeting, agreeing to increase oil production by a whopping 547,000 barrels per day for September. This hike follows a series of accelerated output increases, totaling approximately 2.5 million barrels per day, or roughly 2.4% of global demand. The decision reflects the group's confidence in market fundamentals and the current state of the economy, despite the ongoing geopolitical tensions. Interestingly, oil prices have remained relatively stable, hovering around $70 per barrel, even as OPEC Plus ramps up production. This stability can partly be attributed to rising seasonal demand and the fact that the market structure indicates tight stocks. Amrita Sen, co-founder of Energy Aspects, commented on the situation, saying, "Given fairly strong oil prices at around $70, it does give OPEC Plus some confidence about market fundamentals." The timing of this decision is particularly noteworthy, considering the mounting pressure from the United States on India to cease purchasing Russian oil. This move is part of Washington's broader strategy to encourage Moscow to negotiate a peace deal with Ukraine. President Donald Trump has set a deadline of August 8th for such a resolution, further complicating the dynamics between oil-producing nations. OPEC Plus, which consists of 10 non-OPEC oil-producing countries, including Russia and Kazakhstan, has been cutting production for several years to support oil prices. However, the organization shifted gears this year, aiming to regain market share. partly in response to calls from President Trump for increased production. Since April, the group has been gradually increasing output, starting with a modest hike of 138,000 barrels per day, followed by larger-than-planned hikes in subsequent months. While the market has managed to absorb these additional barrels relatively well, thanks in part to stockpiling activities in China, all eyes are now on President Trump's decision regarding Russia, expected this Friday. Analysts predict that this decision could have significant implications for the oil market and international relations. In addition to the voluntary cut of about 1.65 million barrels per day from the 8 OPEC Plus members, the group still maintains a 2 million barrel per day cut across all members, which is set to expire at the end of 2026. The upcoming challenge for OPEC Plus will be deciding when and how to unwind the remaining 1.66 million barrels, all while navigating geopolitical tensions and maintaining unity within the organization. According to Jorge Leon of Rystad Energy and a former OPEC official, OPEC Plus has passed the first test by reversing its largest cut without causing a price crash. However, the next task will be even more challenging, requiring careful consideration of the remaining output cuts, geopolitical factors, and the need to preserve cohesion among member nations. As the global energy landscape continues to evolve, it remains to be seen how these decisions will impact oil prices, international relations, and the overall stability of the market. Stay tuned for updates on this developing story. OPEC Plus announces major oil production increase for September. Imagine the global oil market as a vast, interconnected web, where every decision made by major players can send ripples across the entire system. OPEC Plus has just made a significant move that could reshape the landscape of oil supply and demand. The organization has agreed in principle to another substantial increase in oil production for September, according to a delegate. This decision marks the completion of a supply tranche that was previously halted. As OPEC Plus aims to regain its foothold in the global market, Saudi Arabia and its allies are set to finalize the addition of 548,000 barrels per day for the upcoming month during a video conference scheduled for Sunday. This increase is not just a simple bump in production. It represents the full reversal of a 2.2 million barrel cutback that was implemented by 8 members in 2023. But here's where it gets controversial. The increase also includes an extra allowance that the United Arab Emirates is gradually introducing. This additional allowance could be seen as a strategic move to boost the UAE's influence within the OPEC Plus framework, potentially sparking debates about the balance of power within the group. The decision to increase production is a clear signal that OPEC Plus is confident in the global economic recovery and a sustained demand for oil. However, this move also raises questions about the potential impact on oil prices. And this is the part most people miss. While higher production can help meet growing demand, it could also lead to an oversupply, driving prices down. This delicate balance between supply and demand is what keeps the oil market in a constant state of flux. As we watch these developments unfold, it's essential to consider the broader implications. How will other oil-producing nations respond to this move? Will there be a ripple effect on global energy policies? And perhaps most importantly, how will consumers and industries be affected by potential fluctuations in oil prices? We'd love to hear your thoughts on this. Do you believe OPEC Plus's decision will stabilize the market or create new challenges? Share your insights and let's spark a lively discussion in the comments.